Hi you guys, welcome. This is Brad. This is the Firefighter's Financial Toolbox. I have been getting inundated with questions from new investors about which is better, a S&P 500 fund or a total stock market fund. You guys, they're pretty much the same. So what we're going to do is we're going to take a look at all these funds and we're going to talk about the differences. And then we're going to go into Portfolio Visualizer and we're going to see what would have happened if we had one fund versus the other over the last 10 years. First of all, if you're a new beginner, you guys, it's more important that you put money in the account. Saving is more important than picking investments. Now, I'm not telling you what to pick. I'm just going to give you three what I think are the best low-cost options. We're going to start with Schwab. So Schwab's Total Stock Market Index Fund is ticker symbol SWTSX. This is a broad diversified total stock market, U.S. stock market. As you can see down here, we have 3,108 total holdings, right? So we have large cap, we have mid cap, and we have small cap. We have a nice low expense ratio of 0.3%, which means for every $10,000 you have invested, you're going to spend $3 a year. So very inexpensive. Look at the breakdowns of the tops of the holdings. Information technology is about 26.5%. Healthcare's 14.75%. Consumer discretionary 11.75%ish. And financial being the last of the four big ones, and that's about 10.5%. And then the rest break down. All right. So if you're in the Schwab family, that's a good one for you. But what if you want to use ETFs? Well, Schwab has one of those for you as well. In this case, you have the SCHB is the ticker, and that is the same fund, you guys. That's a Schwab U.S. Broad Market ETF. It's the exact same fund as SWTSX, just in ETF form. And you can see also this one has a nice low price of 0.03%. Same exact holdings, same exact fund. All right, what if you're a Fidelity guy? Fidelity has the lowest cost of all if you're looking at overall expense ratios. Their expense ratio is 0.015%. That means for every $10,000, you're going to spend $1.50 a year, you guys. That's almost free. And the ticker for that fund is FSKAX. That's the Fidelity Total Market Index Fund. Now, Fidelity does not have their own ETF version of this fund. What they use is the iShares, and they have a couple of ETFs that will work for you if you need that. But they don't have their own actual Fidelity Total Stock Market ETF. All right, let's go to Vanguard. So if we're looking at Vanguard, of course, this is one most people know because it's pretty famous out there, and that's called VTSAX, the Vanguard Total Stock Market Index. Now, one drawback to this is it does have a $3,000 minimum buy-in for a minimum investment. It's got a low expense ratio of 0.04%. And as you can see, if we scroll down, it has a total of 3,529 companies or individual stocks. These are total U.S. stock markets, you guys. So what if you want the ETF version of this? Well, Vanguard can help you with that. Vanguard has the Vanguard Total Stock Market ETF. That's ticker VTI. Exact same fund. And look, it even has a lower expense ratio, 0.03%. But you guys, it's exactly the same fund. And as I said, it's diversified. All of these funds are diversified across large, mid, and small cap. So you have your hands in all parts of the U.S. stock market. All right, so let's take a look. Let's go to Portfolio Visualizer here. So I would try to do a little test. And first of all, let's take a look at how the three of these funds did against each other. So we're going to say we started in 2010. And we're going to go through this year. We're going to include this year's today ups and downs. And we're going to say we started with $10,000, you guys, but we didn't add anything to it. We just let the dividends reinvest. So let's say VTSAX and portfolio number one, yes, and that's 100%. FSKAX, Fidelity total stock market, and again SWTSX, which is the Schwab version. And we're going to put 100% in each one. Let's analyze what the difference is. Okay, so if we come down here, you guys, look at that. The difference between the three of them. Now, each one may vary just a small amount in what they can, but here's the thing. They're within $200 of each other. This one's about $32,200. This one's $32,450, and this one's $32,525. So they're all within a couple $100 in 10 years, you guys. And if we look at it on the bar graph, I mean, you can barely even tell a difference. They all move the same, right? So this year, actually, we see that the top performer is number 1, which is VTSAX, but not by enough to make a difference. So what if we go back and we change this? So let's get rid of this one. Back to the question of whether it's better to have the S&P 500 or total stock market. Now remember, as of late, small cap has not been doing well. But let's compare the Vanguard total stock market index, because I know that ticker, to the Vanguard S&P 500 index. Now I know that one because my wife holds it, so I know the ticker. All right, so good example of what's going to be. Let's analyze those two portfolios. Now, when we look at this one, we see that the balance is almost $500 difference. And as we see, portfolio 2 is up by about $500, you guys. And that is the S&P 500 index this time. But if we scroll down to the bar graph, you can see there are years where the total stock market wins, and there are years when the S&P 500 edges it out. They're always pretty close, you guys. Now, in the last few years, S&P 500 has done a little bit better than small cap. But we got to remember, recency bias is when you say, well, in the last 5 years, large cap has been the best thing, or large cap growth has been the best thing. And you focus on only that. Remember, just because it was good last year or the last 5 years doesn't mean it's going to be better going forward. And you have to keep that in mind. Historically, small caps have done the best of all. It just hasn't been the case in the last, say, 5 to 7 years. But who knows what's coming in the future. Which fund should you invest in? You guys, as I said, the most important thing if you're starting out is just invest. Pick a fund. You don't need to have a bunch of funds. Pick one fund and put money in it regularly. Put it in every month. Put it in every week. If you have a platform, have it taken from your bank account once a week or once a month. Whatever works for you. But consistently invest. That's going to be more important than which fund you pick. Remember, the stock market goes up and down. If you try to time it or pick which one you think is better, chances are you're going to be wrong. And I want everyone to do well. So I hope this helps you. I hope you got something out of it. If you did, do me a favor, you guys. Drop me a like. If you're not already subscribed, you know the deal. Subscribe to the channel. Ring the bell, you get notified whenever I make a video. All right, we'll see you. Thanks.